You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Wednesday. It is time once again to grab your hat and your whistle and head on out to the old proving ground because it is time once again for Options Bootcamp, the premier options educational program. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are binging. Hope you're staying warm, staying safe out there in these crazy, frigid, and indeed crazy markets out there. Of course, if you like what you hear, make sure you're listening to the full network, wherever you're getting boot camp. You're missing out on a whole bunch of other great content if you are not doing so, including, if you like education, the strategy block segment of our option block show, very popular, another long-running educational feature. I don't even mention that often here, but it's a segment of another show. Then, of course, Options Playbook Radio ran for quite a while. Just did a new one. We'll see if we can get that back into regular rotation. Of course, a lot of great educational content. The Advisor's Option, actually, a lot of great educational content there as well. Our buddy, Mr. Matt from ORATS, who has popped up on this show, is a regular on that program. We do a lot of fun analysis and back testing and talking about the efficacy of option strategies there as well. So if you like that content, again, make sure you're listening to the full network. You're missing out on a whole bunch of fun. Speaking of missing out on fun, Pro Q&As, just had an awesome one yesterday with Scott Bauer over there answering all sorts of crazy questions. Options oddities every week as well. Got that panel coming hitting as well. Got giveaways, got live streams for this, everything else we do. Where do you get all that? theoptionsinsider.com/pro. In fact, hey, today's the 31st. Wow, man, this month's flying by on me. So get your name in the hat now if you want to get your name in there. Be entered for the drawing for our January Pro Trading Crate. Trust me, you want to get your hands on these things. They are pretty cool. They are bespoke, each one cooler than the last. theoptionsinsider.com/pro is the place to go. And speaking of cool, I don't know if he meets this definition, but I'll introduce him nonetheless. He is my compatriot in all things options bootcamp crime, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, sir.
Hey, Mark. Great to be here.
It is great to be here where folks love the show, just like this week's 5-star review. Remember, if you do like what you hear, throw some ratings, a star, or like a comment. All that does help people discover the content, just like our buddy this week, Abat maybe. He's saying, just trade, listen, and learn. I don't know. I like that, Dan. That could be a new tagline for the show. What do you think? Trade, listen, and learn. Options Bootcamp.
I like it, man. I like that a lot.
There we go.
Although we should probably change the order, though. Listen, learn, trade.
Yeah, you're right. That probably would be better. Who are we to correct our listeners? But yeah, you probably should listen first before you pull the trigger. But, you know, we get what you were putting down there, Abat. We appreciate the effort and everyone who takes the time to leave a rating and review. You folks are the best as we keep on rolling. Speaking of you folks being the best, let's get to some of you right now. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. We're going to get to the MTM question of the week in a second. I know a lot of you have been waiting with bated breath to get to that. But before we get there, it's been a couple of weeks since we've been live back on the old OBC. Dan's been traveling. I've been traveling. A lot going on. I had that panel going on. So a lot was going on over the last couple of weeks. But now we're back live, listeners, so we can pay off some of the questions we've asked you folks recently out there, including recently we asked you, hey, new trading year. Which option strategy do you anticipate using the most throughout 2024? I gave you 4 categories: long calls, long puts or verticals, covered calls, short puts or verticals, straddles, strangles, or butterflies, or Dan's personal favorite, the calendars or diagonals. Dan, I will give you a hint. Your personal favorite did not win. So what do you think our audience ended up choosing, sir?
Oh, boy. I am going to say, probably long call put / vertical. And I just say that because, long calls and puts are the most commonly traded option positions. Not that they should be, but they are, I guess, just because they're the simplest. So yeah, I'm going to go with that one.
You're just a degenerate premium buyer. That's why you chose that one, sir. But yes, you are correct. 39.5% choosing long calls, long puts, and verticals. 31.6% saying covered calls, short puts, or verticals. And straddles and strangles coming in third, and butterflies, 21.1%. Only 7.9% for your favorite, Dan, calendars and diagonals. In fact, I was surprised it was that high. People have a gut reaction when you say anything time spread related. They kind of freak out. So I was surprised you got that many. By the way, we had a write-in from a listener, White Truck. He wrote in for the zebra option strategy. I am not familiar with this zebra, Dan. You know what the hell he's talking about?
I know. I've never heard of the zebra. What is the zebra?
I don't know. Is this like another jade lizard? We have to go dig up what the heck this thing is now. So White Truck, if you're listening, and I'm guessing you are, then write in, unless you're just being a wiseacre, in which case, well done. But yeah, I don't know what the zebra. It's black, then it's white. So out of on and off, I don't know what a zebra strategy could be. A lot of stripes to it. I don't know. I'm kind of intrigued now. What is the zebra? Hit us up. You have stumped both Dan and I. We also asked you very recently on our volatility views program. Again, this is the show you should be listening if you're intrigued at all about VIX or volatility, and it's kind of popping today, so you might be intrigued out there. We saw one of the the largest single block print in VIX options history for the calls. Someone bought about 250,000 of the these are the UVIX. I'm sorry, that was, we already did the VIX one. Those are the Feb 17s. Spoiler alert, they weren't looking that good until today. VIX popping a little bit better today, but still, those are still underwater right now. But 250,000 of those, you folks wanted to buy them. We asked you, a similar trade went up just last week. The UVIX, this is the levered VIX product now, so 2x VIX, so bit of a wild beast. Someone bought, that product averages a couple thousand contracts a day. Just last week, someone bought 16,000 of the April 12 calls, so multiple days worth of volume in this one print. They paid $2.70 for them. So April 12, 16,000 for $2.70. Do you like them or sold to you? Dan, what do you think? You think our audience is buying these April 12s for nearly $3 in UVIX, or you think they're dumping them?
Goodness. I'm going to guess that they are not buying them. I don't know if they're, selling them, but I'm going to guess that they're not buying them.
Yep. Sold to you, taking it with 60% and 40% saying they like them. They want to buy them. You got to really buy an upside premium in UVIX. I mean, it can work out. Days like today are an example, but you really got to be fast on the trigger finger to get the hell out of Dodge. Those bids in VIX calls are hard to capture. Bids in UVIX, you got minutes, if not seconds, to capture those babies. By the way, found the other poll. 58% of our audience also wanted to buy a few weeks ago the Feb 17s for 67 cents. They're looking a little bit better today, but in general, they have been pretty bad trade overall. But hey, still time until Feb expiration, and some folks think maybe there's some more upside to be found out here in the vol right now. So intriguing stuff. We also asked you last week, what is your preferred way? Again, a lot of vol questions right now to kick off the year. What is your preferred way to trade broad market volatility? Gave you 4 choices. Plain old S&P 500 options. Could be SPX, could be SPY, could be E-mini options. We don't judge. However you like to get your S&P options fix on. Or you go in more direct VIX options and futures. Or you're going to go to the ETPs on VIX, the straight plain vanilla ones, the 1-to-1 ones, so your VXX is that sort of thing, or you're getting a little funky. You're going back to what we were just talking about, the inverse and levered products. So could be inverse, could be SVIX, levered could be UVXY or UVIX. Mr. Dan, sir, where do you think our audience is going? They getting their vol fix in S&P options? They going for VIX options and futures, the ETPs, or the funky inverse and levered ETPs, sir?
Well, I mean, I know what my answer is.
You can't get enough SVIX.
Yeah, yeah. I would say either VXX, if they're actually, like trading vol proper, but maybe just trading plain old SPX, SPY options, because, I mean, I'm not even arguably, you are still trading volatility when you're trading those. It's just not really pure volatility, but one could argue VXX isn't really pure volatility either, because the contango is such a big factor in it.
Nothing pure about VXX. It's a Franken product. Should never exist. No, I'm just kidding. But yes, plain old S&P options taking it, Dan. 41.8%. Our listeners going straight for the jugular. They're not messing around with any VIX products. And then 32. This is interesting. This is also our buddy, Mr. VIXologist on Twitter. I think he kind of did a little Chicago-style vote stuffing, because all of a sudden he exhorted a lot of people to vote, and they're all big fans of inverse and levered stuff. So the inverse and levered ETPs got 32.8% of it. So I think that was something to do with, for a while there, they were winning, which definitely screamed of vote stuffing, sir, because I didn't think they were going to take it. And then third place was VIX. So VIX getting kicked to third place in a vol poll. That's fascinating. 13.4% and only 11.9%, Dan, for your other choice. A good old VXX. No love for those out there. All right, fast forwarding to our question of the week. This week, listeners, one for you to mull over. Again, vol related. A lot of vol stuff to kick off the new year. VIX has been sub 15 since last November, including today, even with today's move. How will this impact your options trading if this volatility regime persists for an extended period? Will you find yourself doing maybe less credit or income type trades? Would you flip it around? Would you maybe start buying more options, more debit, more long premium? You have something else, or are you one of the folks out there, you don't care, you have no impact, you are completely immune to VIX? Mr. Dan, what is your vote? How does this low vol impact your trading? And then B, what do you think our audience is up to?
I think... I mean, I don't want to say I think they're going to be two different answers, because that, makes me sound like, I don't know, whatever. But I think that here's what I think the audience is going to say. And this is only and actually, our audience is a lot of bit smarter than a typical person. I'll tell you what, let me answer that question three ways. Typical option trader, our audience, me. Okay. Typical option trader is just going to be like, yeah, I'm just going to keep selling puts because the market's higher, and, not even thinking about VIX or anything like that. Our audience, I think maybe getting, well, especially based off the last question, trading some of these levered and maybe inverse ETFs, presuming the ballot box was not stuffed. For me, I am going to say, being a little bit more selective. I mean, I found myself doing a lot more option selling than buying at this stage in my career, which is intuitive because most options are overpriced, but not all of them. And when the VIX is lower like this, being a lot more selective and looking for some of those opportunities to buy underpriced options when they exist. So there's my answer for the broad spectrum of option traders out there.
Dan's kicking off political season with a multi-part answer. He's getting in early for the season to come. Let's go out and see what our audience has in store for us, Dan. And you know what, Dan? Weirdly enough, it's an exact tie right now, unless someone votes in this exact second to gum up the works. It is a tie, 31.3% each, Dan, for they're buying more premium, some more debit or long premium trades, And also, no impact. They're just immune to VIX. I want to meet these immune to VIX people. I kind of threw that in there just for fun. And people are saying they're immune to VIX. They don't care about VIX, Dan. 31.3%. And then, obviously, with those two tied, the other two kind of are tied as well. 18.8% each for less credit, income trades, or other. I want to hear what your others are. Speaking of other, our buddy White Truck chiming in again, Dan. He loves our vol polls. He says, I make money from persistent contango, not a uniquely low VIX phenomenon. When VIX goes up, futures backwardate, and when VIX goes sideways or lower, futures contango, and I go to the bank. Yes, contango is what we're talking about. Go back. If all these terms are completely foreign to you listeners, and go back to our vol episode. I believe we did it last July. If not, go check out Volatility Views, because the slope of the VIX futures term structure is really what drives a lot of the profits people make in a lot of these products like VXX and UVXY and UVIX and others. A lot of them are betting on the erosion. That looks pretty good when contango is steep. When it's backward, not so much. Hence what White Truck is talking about here. So get in there. You have, they just gummed up the works, Dan, as we're talking. They just voted. Now it's 33.3% for more debit and long premium, and then 27.8% for no impact immune to VIX. So we are no longer tied. So it was a brief shining moment in time, Dan. And if you want to keep changing these numbers, listeners, get over there at options and make your voice heard. Speaking of making his voice heard, he's been waiting patiently. He's been waiting for a couple of weeks to get back at you with another market taker question of the week. Mr. Dan, what do you got?
All right. So, I mean, this is something that people have been talking about a bit. You know, they've been talking about it in the financial press, and, people ask me this, with these new highs, how can you tell if the market is overpriced? And I'm going to give some guidance here. This is one of these questions where, you ask 12 different people and you're going to get at least 12 different answers. There's not really an exact right answer. But to me, a trader who likes to keep things as clear and simple as possible, I think it has a lot to do with, it has a lot to do with a couple of things, but one of the key things is the PE ratio of the market, of the S&P 500. And that changes on a, tick by tick basis, really. But when we're in earnings season here, and this earnings season, we're looking at a lot of earnings being lower than they have last quarter and last year at this time. And so when earnings pull back and are lower, and when the market's going up, what that does is that brings down the price to earnings ratio. And, it makes the PE ratio lower. That makes the PE ratio higher because the price is higher and the earnings are lower. So that makes the PE ratio higher, which indicates a more overbought market. That being said, there are some things to talk about too, that, the Magnificent Seven, as they like to call them, that make up a pretty big percentage of the S&P 500. You really kind of got to watch those too. But some of the proof is kind of in the pudding there, because those prices are already factored in if you're just looking at SPY and earnings of SPY. It's kind of another long-winded answer, but, I think it's important to know what you should be thinking about here,
Look at you always talking about technical analysis, but you're a diehard fundamentalist at heart. You're going out to old school PE and all that kind of fun, sir. I like it. I'm trying to pull up the current PE ratio for the S&P. For some reason, my screen does not want to play ball with me out there, but definitely higher than it was a year ago, sir. So yeah, intriguing stuff. How high is too high? Well, I guess when we start turning into the red, Mr. Dan, we will know that we have reached that tipping point. Let's keep rolling out to more of your questions. Let's go out to Ivar. Maybe Ivar the Boneless of Vikings fame. Let's see what he has to say. He says, hey, guys. Well, hello, Ivar. He says, I'm loving the same day options in SPY so far. Well, you are clearly not alone, Ivar. It's been all the rage. I'm not sure if you've heard. He keeps going here. Been quite the revolution for my trading account. Oh, well, glad to hear that. He continues, seems a shame we don't have more of them. Any thoughts on more same-day options coming this year. Well, Dan, I have my thoughts. I just did a big panel all about this kind of topic, so I have some thoughts. But before I get there, what are your thoughts on this from Mr. Ivar? You think we're going to see more of these same-day contracts, as he calls them, coming this year?
Yeah, I definitely think so. And it's just because of how competitive the exchange landscape is. Exchanges are, they just want to list more stuff. They're publicly traded companies for the most part. And the more different choices, options that are listed, it can, especially if they're in bigger volume names, it can really exponentially impact the trading volume because you have the arbitrageurs out there who, it's just like a whole nother style of trading that, like, if there's more choices of options, you can do more time spreads and trading this one against this one, and this vol is too high relative to this one. And yeah, I think there's a great deal of incentive for exchanges to list more one-day options.
There are indeed quite a few incentives. By the way, it's showing me here 23.25, Dan, for the S&P PE ratio, down from 24.59 last quarter, up from 19.17 1 year ago. Does that sound right to you?
Yeah. Those are the numbers I've been looking at too. Yeah,
which is it's obviously down a little bit, but still frothy, man. A whole 4 points and change in the course of a year. But speaking of that year, Dan, this is the question on everyone's minds out there right now. We love ourselves some 0-day SPX. What else you got? What else can we trade? And usually when they're asking that question, Dan, they're usually asking about, your Teslas, your Apples, your Nvidias, all that kind of stuff. They want to sling 0 DTE in those. And obviously, technically, you can on expiration Friday. You can. Most of these names have weeklies in them, so you could trade that at least once a week. You can get your 0-day fix on. So that's something. But you guys want it all the time, and we did just do a whole conversation on this. Not just shilling for the Pro. If you want to hear the full deep dive on it, go check out the Pro. It'll be up there by the time you hear this show, listeners. But the gist from that, and also after I did the panel, folks were coming up to me from different exchanges, and we kind of carried on the conversation. And again, it does seem like, as Dan points out, the exchanges are now pretty much all for-profit public entities. So if they had their way, they would probably see more of these listed tomorrow. And what really does seem to be gumming up the works are a couple of things. Most importantly, it is the OCC, the Options Clearing Corp. Their technology, they say, isn't really ready for this yet. And also from a risk perspective, they don't really want a lot of stock flying fast and furious like this after every close, because they're worried about some sort of crazy scenario unfolding and people having all sorts of contra exercise flying fast and furious in the after hours and really gumming up the works for people. So there's also a debate whether we need to create a new series of cash settled Apple and Tesla options, which I think that's also a non-starter. No one wants a whole new series of options. Then someone comes in and they sell a put in Apple thinking they're going to get the stock put to them, but they chose the wrong one. Multiple options change. So nobody, I don't think, really wants that. Or there's the notion of getting rid of contra exercise orders. There seems to be more groundswell of support behind that. Even talking to some of the exchange folks, they say they think that they can get even some of the market makers are starting to buy in on that as well. And they're the ones who are kind of the last holdouts saying, we want these contra exercise orders. They help us kind of balance our books at the end of the session. So if they can buy in, then it really does seem like it's down to the OCC technology issue. And they don't seem super motivated to want to get that going. So I'm going to say we will see what you want, the Apple and Tesla stuff, but not in the time frame you put here, Ivor. Not this year. I think next year might be a reasonable time frame, but I don't think this year, Dan. Does that kind of resonate for you as well, Dan?
I don't know. I don't know how much I buy the we're not ready for it or whatever. As far as what, like, it's too much data in the pipe is what they're talking about, right?
Effectively, and they don't want the stock flying fast and furious in the after hours, which they do have already on certain expiration days, so they can handle it. I also see your argument of the if it makes dollars, it makes sense. That's where the exchanges are, certainly. They want more volume. Mm-hmm. But I just don't think, I think there are still some forces behind the scenes pumping the brake. Speaking of behind the scenes, listeners, we got our folks in the live chat chiming in on our question from earlier about how does lower vol impact your options trading, and options queen chiming in, choosing more debit or long premium trades. That's kind of how I thought. So she's going with the majority of you, and Nichols chiming in with those as well. So a lot of you voting in our live chat there as well. Going the way a lot of our audience is. You're buying more premium when vol is a little bit cheaper. Speaking of our audience, Dan, remember we just did the episode not too long ago. You and our buddy Matt at each other's throats over the great covered call debate. I had to separate you two virtually. Do you recall that episode, sir?
I recall the episode.
You had your virtual dagger. You were ready to get at his throat. It was intense. It was heated. It makes the old McLaughlin group seem like child's play, sir. This is not crazy town, Harry. Check out the episode if you haven't. I'm trying to sell it, Dan. Help me out. Help me out here. Actually, I don't have to sell it because you folks love that episode in droves, including one of our regular listeners, Theta Noob. He's written in the past, and he has a response, a pretty epic response, actually, to our great covered call debate. He says, I just heard the latest Options Bootcamp episode. He sent this in a couple weeks ago, obviously. We've been traveling. He said, well, from what I've gathered, Dan's a proponent of it, meaning covered calls, and the opposing view is that it undermines investment returns. Would you say that's a fair synopsis of your views, Dan? You are a covered call proponent. I don't want him putting words in your mouth, sir.
Yeah, I am a covered call proponent for sure.
All right, well, he backs up his views with some data here on Taiwan Semiconductor, which is an interesting one to be writing calls on because, of course, we all know over the last year and change, the chip stocks have had a little bit of upside. You may have noticed. So that's, of course, challenging. And he sends a ton of graphs. And we love all the data you send over. All the listeners who do this, but we love it when you send it over, including Theta Noob out there. Obviously, we can't share all of this data here on the show. But he puts in, he literally details all of his covered calls. He bought shares starting in 2019. He bought some more in 2021. And then he started selling covered calls on it. He sold 37 successful covered calls. With one period, he didn't do it for earnings week. He got the heck out of Dodge for earning week. He has data on all these covered calls here, so you can see going back. And he says, after all that, my opinion is this is only one example of many failed examples that have had assigned, which have so he also points out some bad ones here. He says, which have undermined my overall investment returns. And you can imagine selling covered calls on a weekly basis could clip some of your returns in a parabolic upside year like we saw last year. However, he says, because I have data, I can seek tickers with similar values to replicate this. He also says, backtests don't take into account the nuances of adjusting for discretional situations. He says, in total, I've made $1,440.25 from selling covered calls on his Taiwan semi position. That's an additional $1,440.25 I wouldn't have. And I learned it from Mark and Dan. Options aren't for everyone. Some would definitely excel with just buy and hold. I, however, enjoy trading and trading options in particular. I don't think I'm good at it. You're not giving yourself enough credit, Theta Noob. I just know I'm growing and learning to use it more efficiently. Just wanted to thank Mark and Dan for dedicating your time to teach the masses an invaluable skill. If you're starting out, go through the archives of Options Bootcamp. If you're still here trading, don't stop learning and listening. Well, Dan, and indeed, Theta Noob, we love you folks responding to this. I'm glad to see yet it's working out for you. Again, I don't want it to be like some sort of blanket prohibition against covered calls. It is just worth pointing out that even as you say in your own, it kind of clipped some of your returns there as well. In these parabolic upside years, like we saw last year, some of the chip names, or back in 2021, covered calls were definitely clipping some of your returns. But also, you're happy with the income, so there you go. I mean, this is a highly subjective thing at the end of the day. Dan, what do you have to say for our buddy here at Theta Noob, who A, loves the show, so obviously no accounting for taste, and then B, has a lot of data backing up, and he says he's happy he did his covered calls for the last few years because he's got about $1,400 that he says he wouldn't otherwise have, and it's because of us.
Well, I mean, he makes a really, really good point when he brings up the fact that backtests don't account for the management aspect. Like, that's extremely important. I mean, backtesting is very, very helpful, but like it's helpful to an extent. It's helpful to sort of get an idea, but then once you're actually trading it, it's going to be different. And if you're a good trader, it's going to be better because you're like, backtesting is based off one of a couple things. One is like the closing price, or I think actually Matt uses the price 10 minutes before the close or something like that, 15 minutes, or, some sort of trigger. Like if the stock is up 10% close or something like that. And that's not necessarily how it works with covered calls. So, yeah, I think that's the best point that he makes.
All right, let's keep going here. Let's go out to Conrad. Conrad says, what are your thoughts on the call skew we're seeing right now in many stocks? Are we living through 2021 part 2? You know, it's funny. We just had this conversation yesterday on our pro Q&A, and he kind of finished off his comments about that, saying he's seeing a lot of kind of near historic call skew levels again in certain names. You kind of have to pick your poison now. It's not like it was in 2021 where it was kind of just throw a dart at the board and chances are you hit a name with inflated call skew. Not quite at that level, but we're starting to get some interesting levels. I was just pulling up some data on SPX here while Dan was talking. Obviously, 30-day implied in the SPX is at the lower end of the range, 27th percentile for the year. The skew, though, even lower at the 11th percentile. So that means, obviously, a couple of things. That's a combined number. That means, of course, the puts are not as bid as perhaps you might think, and also the calls not quite as offered as you might think in that as well, which would also lead into a little bit of some juice coming back into this market. The lowest level we've seen for a 30-day skew was back on December 19th, which again, that's a bit of an aberrant period. That's mid-December, so kind of a bit of an outlier there. The highest period for skew, 45.1% that for the past year came on May 24th of last year. So that's interesting. That's after kind of some of the sell-offs we saw in March post-contagion, and then again in October. So an intriguing period for high skew. Again, that's a combined number. I'll have to dig in a little bit more to pull out the call skew. That's the combined call and put skew number. But intriguing stuff nonetheless. Dan, I know you keep an eye on skew over there at Market Taker. First off, maybe let's start with the general supposition that Conrad has. Do you agree with what he says that we're the massive call skew we're seeing right now? And do you think we're living through 2021 part 2?
It's a tough question to answer. There's a lot of moving parts, and I am, not an economist by any stretch of the imagination, but I think about this stuff every day.
But you play one on the radio, sir.
Yeah, I play one on the radio. I think when you see calls being bid up, what that typically indicates, I think, is probably retail traders going in there and trying to participate in the rally for cheap. And retail traders, when we're generalizing and talking about not the sophistication of our listeners, but the typical retail trader who, watches a 2-minute YouTube video, decides calls are for him, and loses all his money by buying calls. They don't always make the best decisions. So I think that if we start looking at the bigger macroeconomic picture, kind of high PE ratio across the board, we see some of these big Magnificent Seven names getting a little bit spanked lately, and they're the ones that have been keeping the market up. There's been some exuberance in, oh yeah, we're going to cut rates, tomorrow, but we're not. So yeah, there's a lot of moving parts, man. A lot of moving parts.
But yeah, you could certainly, if you pick your spots here, who was that, Conrad, then yeah, you can find some decent call skew out there. And that, of course, opens up certain opportunities. Verticals are much more attractively priced than they were before. Ratios, butterflies, anything that takes advantage of buying something closer to the at the money and selling something a little bit farther out, takes advantage of that skew, now suddenly looks a lot more attractive. So that's what you should be looking at in those types of names where you do see those elevated call skew. Maybe it's time, I don't know, Dan, is it time to do maybe another episode on what to do in high call skew environments, just for a refresher for guys like Conrad? What do you think?
Yeah, you know what? That would be fun, man. That's a great idea.
All right, so there you go, Conrad. Asking you shall receive. Maybe we'll have a whole new episode about that coming up. Speaking of listeners and loving to hear their names on the show, a lot of you do, I know that, including both of our next listeners. We're very excited to hear your names on the show. So you know what? You're going to hear them again, just for fun. First off, our buddy Diver SK. He's been writing for a while with his ongoing wheel trade updates for us in AMC. A lot of people giving us their trade updates. Hey, we love it all. Keep the data coming. He says, AMC this week had orders in at the offer, but never got a fill. So current stats, now he's down to only 69% yield. Oh, that's terrible. I feel for you, Diver SK. Still pretty good. We'll try to let this catch back up to $6 and then stick to the at the money put and 70 delta call. Remember, that's what he's been doing with his wheel, listeners. He sells an at the money put. If he gets a stock put to him, he then turns around and sells a 70 delta call, rinse and repeat. Then he says, thanks guys for mentioning me on the show. Well, you're welcome, Diver SK. Just got another one. And then one of his buddies who's also listening to the show and been doing the wheel or trying to, Just John, says, I also heard that episode and I was surprised when I heard my name mentioned. LOL. Well, just what, Just John? You got mentioned again. So bam, a little love for both of you out there. Hope your wheel trades are going. We love all of our listeners here on the old OBC. We'll come up against. We'll see if we can squeeze in a few more here on the week. Let's go out to Vincent. Let's go out to Vincent Thompson. He says, I found the brief discussion about, quote, garbage options to be intriguing. Do you think it's worth doing an entire episode about that concept? I can't be the only person who's intrigued. Yeah, Dan, he's referring to that episode we did a while ago where we mentioned kind of the garbage junk options. I've also talked to them a lot with our buddy Matt. He's the big proponent of these on shows like the Advisor's Option and even a few others, maybe even Volatility Views. He's been back testing these a lot lately. What we're talking about here, listeners, are these kind of really small delta options. 2, 3, 1 delta calls in the VIX and similar range puts in the S&P 500 and how they can actually perform surprisingly well. And you don't need the massive move you would think to make these pay off because it's not a delta play at all. The delta is pretty much non-existent. It's a skew and volatility play. And when those kick in, they could kick in pretty aggressively. So it's an intriguing one. It's not a trade for the faint of heart. I would say it for the lion's share of this audience, probably maybe not suitable because it's going to require some savvy and a lot of good timing on your part to make these pay off. But I don't know, Dan, you think we should bring on your nemesis, Mr. Matt, and do a whole episode about these garbage options, sir?
Now that would be interesting, man. Yeah. All right. I'm for sure game on that.
All right, we got two episode subjects booked and ready to go here, Dan. We got a lot of homework for us coming up. Let's got a silly one here before we get out of here. Let's go to, I like this handle. Speaking of silly, Evil Bay. I like that. eBay can be the Evil Bay at times, Mr. Evil Bay. He just wants to know, how was the Rumble? Well, the Rumble was fun. We went out there. I obviously, if you listen to our Option Block show listeners, we do our 80s wrestling segment. Have been doing so for a couple of years. So I thought it was time to do some in-person research. I went down to the Royal Rumble this past weekend, and it was kind of fun. Got me thinking, Dan, too, of how we could replicate that concept here on this show or on the network. You know, the Royal Rumble, they have 30 people, they send them out one at a time. You never know who's coming out next, and then they all fight. How can we replicate an options rumble, Dan? Maybe we do like a strategy rumble. I don't know if 30 is a lot, but maybe we cut it in half to 15 or something. We have like the covered call and the short put started out and they start fighting and then in comes the butterfly and we have to pick one, you know? I don't know. What do you think of that, sir?
Well, it's going to take some creativity there, Mark.
Luckily, you got me to carry you in those deep waters. I think that could be something that could be fun. An options rumble. Stay tuned for it. Maybe not soon, but maybe next Royal Rumble season, Dan. What do you think? We'll have a little bit of an option. What do you think we'll win? I don't know. I guess that's what the Rumble will determine here on the show. All right, Mr. Dan, man, we went all over the place today on the show. But before we go, if folks want to check out what you got cooking in MTM land, where should you go? What should you do?
Head on over to markettaker.com, 2 T's in a row, and we welcome you with open arms. Join our chat room, which is currently for free, and it's a really great community.
I like this idea of an options rumble. I'm going to mess around with it a little bit, and we'll see which strategy will survive. Or maybe we have 30 options traders come in and just duke it out to the death. What do you think?
All right, I'm look forward to see what you come up with, man.
All right, we'll keep workshopping it. In the meantime, listeners, check them out over there. MarketTaker, 2tsinaro.com is the place to go. We got to get on out of here. Back again tomorrow with our double header of extravaganza content, including the option block, followed immediately by good old This Week in Futures Options. You're getting all sorts of fun analysis and data and usual activity coming at you tomorrow. Friday, of course, volatility views, and then after that, exclusively for your pro folks over there at theoptionsinsider.com/pro. You're going to get options oddities, a whole mess of unusual activity analysis and a whole bunch of fun as well. Then we kick off another week all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.